Ladies and gentlemen, welcome back to Vietnam Stock Market's Opportunities. It's an honor to have the opportunity to address such a distinguished audience. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the two QR code on the screen so that we can support you. And the other way to contact with us is please follow and subscribe the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Hồng Nguyen. She's a personal financial advisor. You can contact her with the email hongdaonguyen@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trần Đạo Street, Hoàn Kiếm District, Hà Nội, Vietnam. And the purpose of this video is to update you about IDC, Vietnam Urban and Industrial Zone Development Corporation. IDCO is a leading industrial park developer in Vietnam with a current total site area of 3,268 hectares in key southern and northern industrial provinces. IDC also invests in hydropower plants, electricity trading, construction, toll roads, and real estate projects. As you can see on the screen, this is the report which was collected by Viet Capital Securities about IDC on the 24th November 2022, with the current price is 29,000 Vietnam dong, target price 45,500 Vietnam dong, last target price 93,200 Vietnam dong, upside to target price more than 56.9%. Dividend yield 10.3%, TSR more than 77.2%. Bright profit growth outlook, attractive valuation. We maintain our buy rating for IDC but cut our target price by 51% to 45,500 Vietnam dong per share. Our lower target price is mainly driven by 1. Our 3.5 PPT higher WACC. 2. Removing all of IDC's future IP projects. Total site area of 2,046 hectares from our valuation. And 3. Our newly applied valuation discount of 10% to buyers and IDC's conglomerate structure, which are partially offset by the positive effect from rolling our target price horizon forward to end 2023. We apply a conservative valuation approach for IDC, as we now only incorporate IP and residential projects that have already obtained investment approval and are in development into our valuation and target price. We raised our 2022 forwards net profits after tax MI forecast by 7% due to higher than expected IP revenue recognition, notably from the fully occupied Mỹ Xuân B1 IP, while broadly maintaining our 2023-2024 forwards net profits after tax MI forecast. For 2022 forwards, we forecast revenue of 8.5 trillion Vietnam dong, $343 million, led more than 97% year-over-year, and net profits after tax MI of 2.3 trillion Vietnam dong, $93 million, more than 403% year-over-year, which are mainly driven by finalized recognitions from the fully occupied Nhân Trạch 5 and Xuân B1 IPs in 2022, and year-on-year higher one-off recognitions for IP land sales. We forecast 2023 forwards revenue of 9.4 trillion Vietnam dong, $379 million, more than 11% compared to 2022 forwards, and net profits after tax amount of 2.5 trillion Vietnam dong, $101 million, more than 10% compared to 2022 forwards, which has primarily driven by continuing profit growth from all of IDC's core businesses. We expect year-on-year higher one-off recognitions for IP land sales in 2023 forward to offset a year-on-year plunge in finalized recognitions for fully occupied IPs. We believe IDC is a major beneficiary of rising IP land prices thanks to its large cleared IP area in key industrial provinces. In addition, IDC's strong profit growth outlook is supported by its strategy of being more aggressive in IP land sales activities and its change in IP land sales recognition methods that matches more with its solid cash inflows from the IP segments. Potential downside risks, lower than expected approval and development of future IP projects. Bright outlook for IP land sales contracts to fuel profit growth in 2023 forwards. In 9 months 2022, IDC stated that signed leasing contracts for 78 hectares and memorandums of understanding for 52 hectares, which we believe provides solid headroom for IDC to recognize profits from IP land sales in 2023 forwards. As of Q3 2022, IDC stated that it recognized one of IP land sales of 17 hectares for 9 months 2022 signed contracts. Moreover, management is confident it can achieve its full-year IP land sales target of 160 hectares in 2022. We forecast year-on-year higher one-off recognitions for IP land sales in 2023 forward of 140 hectares, more than 56% year-on-year to offset a year-on-year plunge in finalized recognitions of unearned revenue from fully occupied IPs in the year. Large cleared IP land area to continue enjoying high demand and land prices appreciation. As of Q3 2022, IDC had a remaining leasable area of 717 hectares, and we estimate 86% of this area has already been cleared and compensated for. We believe the many remaining leasable area can secure strong land sales and profit growth over the medium term. And now we move on to the 9 months 2022 recap. IP segments boost profit growth. IP. VCSC comments. In 9 months 2022, IDC recognized unearned revenue of 1.4 trillion Vietnam dong, $56 million from the fully occupied Uncheck 5 IP, and 470 billion Vietnam dong, $19 million from the fully occupied Mỹ Xuân B1S revenue, contributing 46% of IP revenue in the period. In addition to recognition of unearned revenue, we estimate IDC recorded one-off IP revenue recognition of around 1.6 trillion Vietnam dong, 65 million US dollar in 9 months 2022, compares to no such revenue in 9 months 2021. IDC stated that it recognized around 81 hectares of one-off recognition for IP land sales in 9 months 2022. Energy. In 9 months 2022, energy revenue, including electricity trading and hydropower plants, increased 6.7% year-over-year to 2.1 trillion Vietnam dong, 86 million US dollar, with gross profit surging 61% year-over-year to 162 billion Vietnam dong, 6.6 million US dollar. We attribute this result to IDC's postponement of the Dogme 3 hydropower plants operations in 9 months 2022, which led to weak growth in revenue. However, gross profits improved in the period as this project has incurred gross losses while in operation. Toll collection. In 9 months 2022, toll collection revenue increased 50% year-over-year to 312 billion Vietnam dong, 13 million US dollar from 9 months 2021's low base as the government requested to postpone toll collection in Q3 2021 due to COVID-19. Financial income. In 9 months 2022, IDC's financial income plunged 69% to 132 billion Vietnam dong, 5.3 million US dollar, which was mainly due to an absence of divestment gains in the period. In 9 months 2021, IDC recognized divestment gains of 344 million Vietnam dong, 14 million US dollar, accounting for 82% of total financial income in the period. Net profits after tax amount. Strong profit growth was driven by upbeat IP revenue recognition. And next, that is the 2022 outlook. IP segment to continue to drive profits, partially offset by year-over-year plunge in financial income. IP, we raised our 2022 forward IP revenue forecast by 16% to 4.5 trillion Vietnam dong, 182 million US dollar, more than 555% year-over-year as we incorporate 1. The recognition of unearned revenue as revenue of 470 billion Vietnam dong, 19 million US dollar from the Mỹ Xuân B1 IP in Q3 2022, and 2. Raise one-off recognitions of IP land sales. Apart from the recognition for the Nguyen Trạch 5 and Mỹ Xuân B1 IPs in 9 months 2022, we assume around 90 hectares of one-off recognition for IP land sales in 2022 forward. Previously, 70 hectares compares to no such recognition in 2021. Toll collection. We raised our toll collection revenue by 11% to 417 billion Vietnam dong, 17 million US dollar, more than 35% year-over-year, which is mainly thanks to higher than expected traffic growth in 9 months 2022. We note that toll collection revenue in 2021 was a low base as the government requested to postpone toll collection in Q3 2021 due to COVID-19. Minority interest. We raised our 2022 forwards minority interest forecast as we factor into the recognition of the Mỹ Xuân B1 IP, of which IDC only owns 51% stake. Net profit after tax MI. Our current forecast imply Q4 2022 forwards net profit after tax MI of 183 billion Vietnam dong, $7.4 million compares to a net loss of 1 billion Vietnam dong, $40,300 in Q4 2021, which will be mainly driven by our assumed 10 hectares of one-off IP land sales recognition in Q4 2022 forwards. Our solid profit growth forecast for 2022 forward is mainly driven by the IP segments and partially offset by an expected year-over-year decrease in financial income as IDC recorded high financial gains from divestment in 2021. 2023 outlook profits growth to be fueled by IP land sales. We forecast IP revenue to edge up 6.3% year-over-year to 4.8 trillion Vietnam dong, $194 million in 2023 forward, which we expect to be mainly driven by one-off IP land sales recognition for 140 hectares, more than 56% year-over-year of 3.7 trillion Vietnam dong, $149 million, more than 153% year-over-year and contributing 77% to our 2023 forward IP revenue forecast. And recognition of the remaining unearned revenue of the fully occupied Mỹ Xuân B1 IP as revenue of 620 billion Vietnam dong, $25 million, less than 68% year-over-year and contributing 13% to our 2023 forward IP revenue forecast. As of end Q3 2022, IDC stated that it has a remaining 61 hectares of site leasing contracts that have not yet been recognized, as well as 52 hectares of IP land for which MOUs have been signed with tenants. Energy. We expect 2023 forward electricity trading revenue to rise 3% year-over-year to 2.8 trillion Vietnam dong, $113 million, contributing 91% to our 2023 forward energy revenue forecast, which we expect will be mainly thanks to higher volume year-over-year. We forecast 2023 forward revenue from hydropower plants to jump 56% year-over-year to 427 billion Vietnam dong, $17 million, as we expect the Doc Me 3 hydropower plant to resume operation in 2023 forward. We expect toll collection revenue in 2023 forward to be mainly driven by year-over-year traffic growth. Real estate. We forecast residential real estate revenue to surge to 465 billion Vietnam dong, $19 million in 2023 forward, which is mainly driven by the delivery of 2.2 hectares of commercial land in the central residential expansion area in Ward 6, Long An Province. That amounts to 394 billion Vietnam dong, $16 million. Minority interest. We expect minority interest to increase 49% year-over-year as we forecast IDC will recognize unearned revenue from the fully occupied Mỹ Xuân B1 IP, along with the recognition of land sales in the central residential expansion area in Ward 6 Long An Province in 2023 forwards, IDC owns 51% of both projects. We forecast the later project will have no major contribution to IDC's revenue in 2022 forward, while the revenue contribution from the Midsun B1 IP is expected to rise 32% year-over-year. And now I will share with you the valuation. Let's take a look. We value IDC using a sum of the parts approach in order to capture the company's IP and residential land revenue as well as contributions from the energy and toll collection segments. We value IDC's IP and residential segments using the revalue net assets value methods, which we believe is the most suitable and widely used approach for IP and residential businesses. We value IP and residential projects using the DCF methods. In this update report, we mainly incorporate IP and residential projects that have already obtained investment approval and are in development into our valuation and earnings forecast. We remove our forecast and valuation for IDC's future IP pipeline expansion of 876 hectares in northern Vietnam and 1,170 hectares in southern Vietnam in terms of total project site area. We also apply a new valuation discount of 10% compared to no discount previously to our valuation for IDC to reflect the company's conglomerate structure. We value IDC's An Sương An Lạc BOT project using a DCF methodology, giving its stable cash inflows. Meanwhile, we value the company's energy segment using a PE comparable approach, whereas we expect this segment to experience relatively stable profits over the medium term. Figure 7, valuation summary. We use a WACC of 15% compared to 11.5% previously for discounted cash flow valuation methodology for IDC's IP, residential, and toll collection projects. In addition, we raised our in-house market risk premium to 8% compared to previously 7% and increased our beta to 1.5 times compared to previously 1 times in line with these IDC's updated beta from 1-year weekly data. Figure 8, WACC summary. Figure 9, WACC sensitivity analysis on target price. We value IDC's energy segment using relative PE multiples. We apply a target PE of 10 times and 15 times compared to our previous respective targets of 11 times and 14 times for the hydropower and electricity trading subsegments, respectively, which are equivalent to the 1-year average median PE multiples of selected peers. Figure 10, energy segments. We benchmark IDC's hydropower plants against other listed hydropower developers in Vietnam. Meanwhile, we select electricity trading companies in Vietnam and Asia for comparison with IDC's electricity subsegments. Figure 13. Comparable peers for hydropower subsegments. We value the toll collection segment using the DCF method, which only comprise the Ansil Amlab BOT project that has concession periods until 2033 forward. Our cash outflow assumption is mainly capex to finish construction for the Tân Quý Bridge, which amounts to 65 billion Vietnam dong, 2.8 million US dollar, while the remaining is annual maintenance expenses during the concession period. Our traffic growth assumption is mainly based on historical features that show stable low annual traffic growth for the Ansil Anlap BOT project. Meanwhile, we conservatively assume there will be no tariff increase in the remaining concession period. Figure 15, our valuation summary for toll collection segments. Peer comparison. Peer comparison. We select IP developers that have similar size and are developing projects in both northern and southern Vietnam for comparison with IDC. In terms of comparing IDC to peers, we believe the most suitable method to look at an IP company is revalue net assets value. However, we do not have sufficient information to conduct RNAV for all of IDC's peers. As IP developers adopt different accounting methodologies for IP land sales recognition, we use our estimates of adjusted PB as a more appropriate metric for reported PB to compare listed IP developers. Currently, IDC is trading at an adjusted PB of 1.3 times, which is a 7 times discount compared to our selected peer median adjusted PB of 1.4 times. However, we believe IDC deserves a higher premium as the company has a higher ROE and higher potential profit growth, supported by changes in the recognition methods for leased IP land. Compared to the peers median figures. However, IDC has a solid IP expansion pipeline and potential earnings upside from its real estate segments. Therefore, we believe a premium rating compares to the peer median is reasonable. Adjusted PB ratios for IP developers. In order to make PB ratios of IP developers more comparable, we estimate adjusted book values based on the assumption that all selected companies apply the same IP land sales recognition methodology. For companies applying the revenue allocation method, the PB ratio is relatively higher because these companies record a significant proportion of IP land sales as unearned revenue compared to those applying the one-off methods who recognize 100% of IP land sales through their profits and loss statements of the settlement of land lease contracts. In this case, we assume all selected IP developers will recognize IP land sales using the one-off methods. We assume unearned revenue of those applying the revenue allocation methods will be recognized into equity. We make only one assumption for this adjustment, which is our net profit margin assumption after bonus and welfare funds. For the IP segment that ranges from 20% to 40% and is mainly based on average margins over the last 3 years. Figure 17, adjusted BP ratios of IDC and its peers. Historical recommendations. Figure 18, historical VCSC target price compared to share price. Actual price and target price. Financial statements. And that brings me to the end of my presentation about IDC. Hope some informations and this video will be useful for you. And if you want to open a legal trading account, please contact with us with the information on the screen so that we can assist you. Thank you for your attention. See you next time. Bye.